It's the crypto bros. A lot of these people were, and still are to a smaller degree, semi-religious, like a cult.
What is crypto? Could Bitcoin be the next, currency?
As far as I'm concerned, the future is always an unpredictable place. There is still money to be made in this industry as there ever was.
Can anybody do this? Crypto divides opinion like almost nothing else in investing. For the true believers, it's the future of money, decentralised, disruptive, and designed to sit outside traditional financial systems. A way to take back control, cut out middlemen, and invest in technology that could democratise money. For others, crypto looks far less convincing. They see a market that's speculative and opaque, where prices move faster than understanding and regulation lags innovation. To critics, it feels less like a financial revolution and more about faith than fundamentals. Welcome to Investing Unlocked, making money make sense with me, Georgie Frost.
And me, Simon Lambert.
And joining us today is Glenn Goodman. Glenn is a former financial journalist turned full-time crypto trader and author of The Crypto Trader. But first, Simon, a crypto bro, a true believer, or a no-coiner?
Are you asking which one I am?
Yeah. I think the first two are the same, right?
Neither. I'm none of the above.
None of those.
None of the above.
Right.
I
Where do you sit in
I have some Bitcoin.
Yeah.
And I have had some Bitcoin for a very long time.
Yeah.
I bought it after the first boom and then it crashed, and I bought it when it was down low then, and I've held it all the way up and all the way down and all the way up again.
Yep.
And then all the way down.
You've had a journey with it, haven't you, Simon?
I know. And recently I've held it all the way up and then all the way down again.
Yeah.
So, I think...
So you've still hodled?
It's a small part of my investment portfolio, and I think it's worth having a bit in a sort of just in case thing. In a conversation that I once had with a friend, and I described it as an insurance policy against him being right.
Right. Fair enough. I am really interested by this episode because I have to say, and this is going to offend a lot of the crypto bros, true believers, I have an aversion to crypto. And I think the reason I have such an aversion to it is because there's a lot of people telling you should do it. And I remember covering this as a story on radio once, and I had quite a bit of stick. And someone said, my grandma could explain it better than you, which I thought, well, in a 3-minute slot on national radio explaining crypto, your grandma must be very smart. But it does feel to me like there's a lot of people shouting at me, telling me what I should be doing, and I naturally don't like that. So I don't know if that's got something to do with it. But Glenn, I'm going to be honest with you straight off the bat, and this is probably not a nice thing to say early on in the podcast, right? But I'm going to do it. I read your book. I liked your book. You're looking scared now, Glenn.
Yeah.
But I tell you, there was something about being in public with a book that's The Crypto Trader, How Anyone Can Make Money Trading Bitcoin and Other Cryptocurrencies. And not just that, Glenn, as you might see there, I've put Post-it notes in. So I look like I was really, really engaged with becoming a crypto trader. But there was something visceral about my reaction to being viewed as a crypto trader. So
your dirty little secret.
Exactly. So I kept doing that when I was out. And I'm sorry, Glenn, because I should have been doing this. You can buy this book in all good bookshops. And I'm so sorry, Glenn, but is that a normal response?
I think so. I should supply it with like a brown paper bag for people to kind of carry it around in surreptitiously.
But where does that come from, do you think? Because honestly, that surprised me.
It comes from what you're talking about. It's the crypto bros. It's the young dudes who are like, no, man, crypto's going to go to the moon. No. And it like doesn't matter what you say to them. I mean, I'm talking a little bit anachronistically here because to some extent that is a thing of the past now.
Yeah.
It was 2017 and then the big one, 2021, where the place was filled with those people. And every time I went on air, I experienced exactly the same thing you did. Whatever interview I did, whatever I said, there would always be people commenting, no, you're wrong because it's definitely going to go up 10 times in price this year because A, B, and C nonsense reasons. And a lot of these people were, and still are to a smaller degree, semi-religious about it.
Yeah, it felt like that.
Like zealots, it like a cult.
Yeah, exactly. But where have these people gone? You said doesn't feel that same way as before.
Yeah.
Was it the sort of Sam Bankman-Fried? And we'll go into that in more detail. But what is it like now?
quieter.
It feels it.
Which
but
is
why
good in a way,
yeah?
because it's like there is still money to be made in this industry as there ever was, but there's just fewer annoying people like yapping in my ear, which I quite like. But of course, the downside of there not being all these kind of religious zealots is that they're not there to infect other people with their madness and then cause those other people, say friends and family, to buy crypto and Bitcoin, push the price up, and help those of us who actually owned it to make money out of it. As it is, I sold all my Bitcoin months ago.
All right.
Because for various reasons, some of which you will understand from reading The Crypto Trader, I sort of know the signs of when it tends to be peaking. You can never know for sure, and that's where I really differ from the zealots, is in being sure of anything. As far as I'm concerned, the future is always an unpredictable place, whereas those people just believed that there was destiny, that Bitcoin would become the global reserve currency and take over the world, and the dollar would become nothing. Now, it's still quite possible that the dollar could become not the global reserve currency at some point in the next decade or two. Absolutely possible. But will Bitcoin replace it? That's a very big if, as far as I'm concerned, and it always has been. So that's where I differ with the so-called Bitcoin maxis, who are those people you're talking about.
Could we just take a little bit of a pause?
Yeah.
A reverse,
Yeah.
slow down, and just let's explain, I guess, in layman's terms. Go easy on me, Glenn. What is crypto? Because you said there about, could Bitcoin be the next, currency? Well, it might not be Bitcoin, people will say, but it's the technology. So just explain to us, when we're talking about crypto, what are we talking about? Where did it come from? Why is it here? What is it? Is it a commodity? Is it, money? What is it?
This is why people do get confused, because yes, Bitcoin is a type of money, but
Do we
lot
use
of
it
other
as money?
Yes,
Yeah.
but a lot of other cryptocurrencies, many of them could also be used as money, but not all of them. And a lot of them are used for other things that aren't really anything much to do with money, but more to do with IT, technology. Yeah, I know. It's
Like what?
So it's a bit like using Microsoft Windows as money.
Do you know what? It's funny you say that, because Ethereum, which was the second sort of big cryptocurrency to be invented, was originally known as the world computer, because it is basically a kind of operating system. Like the code that was written that makes Ethereum work also means that other apps can be built on top of Ethereum. Ethereum is the Windows, and then you build other apps like you have other programs in Windows, right? Same kind of principle. But at the same time, Ethereum is money, a type of money that you can spend, and it's worth a certain amount at each point in time. You can exchange it for a certain number of dollars right now. If you wanted, you could exchange a certain, I can't remember exactly what the price is, but you give them your dollars, you can get some Ethereum. Give your dollars, get some Bitcoin. I don't know why I keep saying dollars. It's because dollars is the currency we still use for everything.
Absolutely, yeah.
But yeah, in our case, it would be pounds, I suppose. You can exchange your pounds.
So you said you can still make money from crypto. We might not have enough noise, but you still think, and that would make sense because you are a professional crypto trader. It would be a bit rubbish if you didn't think you could make money from crypto. But what makes you so sure that you can?
Well, at this particular moment in time, I'm not trying to make money in crypto.
Right.
Because as you will again know from my book, I trade the cycles, right? And this is probably something Simon wishes he had done, but at the same time, probably couldn't be bothered to do, like most people can't, because it was a relatively small part of his portfolio. It's not a big deal. He's just like, okay, I'm going to buy this and see what happens, which is fair enough. But if you wanted to, optimize the amount of profit that you make, and really specialize in the crypto area, then I discovered pretty early on that because it runs in these big cycles, up and down, and they used to be known as 4-year cycles, though that 4-year pattern has broken down somewhat recently. But even so, you're still in roughly 4-year-long cycles. So it occurred to me, a decade or so ago, that it probably made more sense to buy near the beginning of each cycle, as Simon said he did at the beginning of one cycle when it was really low down, and then sell when I judge that we're near the top, either around the top or just after the top, is when I generally tend to sell. That's how a trend trader works. And actually, that's applicable not just to crypto. So anyone watching this who isn't interested in crypto, these same trading principles work across all asset classes. I've been trading for more than 25 years, and I use those very similar techniques for stocks, for trading commodities like oil and gold and silver. It's all done in a pretty similar way when you're trading trends. And what that really means is just sort of going along with the crowd, following the momentum, and then working out what the signs are that the momentum is no longer in your favor, that things are changing, that people are losing interest, that you're at a peak. And then that tends to be around the point where I sell, wait for it to go down a lot, because it always tends to go down a lot as it is, as we speak. It's starting to go down, not hugely, but it is going down, which is, why I sold before that happened, if you see what I mean. But then eventually it gets to a bottom. Everybody's going, crypto's dead, Bitcoin's finished. You'll see all the usual articles in the Financial Times. And, even the Financial Times, which is a really serious newspaper that I respect, even they go along with the general crowd of, you'll see all the articles. And you saw them in 2022 with Sam Bankman-Fried. You'll see them again.
Who is Sam? We have to explain this.
Sure.
Who is Sam Bankman-Fried?
Well, just to remind people who may remember the story from 2022, he suddenly appeared out of nowhere, became the world's most influential crypto figure in the space of what seemed to me like 5 minutes. So alarm bells were ringing like crazy in my head. I was just like, who? And he had crazy hair. That's how you'll probably remember him. Like big, curly, dark hair. And he wore shorts on stage at these big conferences where he was like palling around with Bill Clinton and Tony Blair on stage. And, again, as I say, it's like 6 months earlier, I hadn't even heard of him. And I am immersed in the world of crypto. He was now suddenly running the world's second largest crypto trading exchange, which is like the equivalent of a stock exchange, but based in the Bahamas with no regulation to speak of whatsoever. And as I say, so some kid in his 20s appears out of nowhere, suddenly running the equivalent of the second biggest stock exchange in the world from the Bahamas with no regulation.
Throwing money at celebrities and the Super Bowl.
There was just no kind of worry about this that I could see. And this is what you get, not just with the media, but with the world in general, I think, is that when people are excited about things, they sort of shut off their critical faculties. And so, somebody like Bill Clinton or Tony Blair will get up on stage with this guy and be like, oh, I've heard that he's the king of crypto. They love he's the king of crypto. Come on and interview him on the stage or talk to him and be on a panel with him. And they'll all be like, all right, cool,
but do you
king
reckon,
of crypto. But it's
do you
nonsense,
guys reckon there's a couple of elements? For me, I see a couple of elements here. One, he's a young guy.
Yeah.
Right. And I do think there's a bit of a sort of fetishization of youth when it comes to certain fields. And crypto is one of them. And the second is crypto. Really, it's quite difficult for a lot of these people to understand how it works. So people go, well, he's young, he must know.
Yeah.
You see this a lot with social media and with those sorts of things. They must know because they're young.
Well, the other thing was, and I would highly recommend that people read the Michael Lewis book.
Which started off as a sort of hagiography, and then he realised that actually it wasn't quite that way.
Because it is a fascinating story, and there's a lot more to the story than many people think on the surface. And actually, until I read the book, I didn't know how much there was to the story. But one of the crucial things is that he is an absolute genius. Right, he was literally a child genius, a very strange man, and also he was weirdly not necessarily in it for the money, and sort of operated outside the normal rules and ethics that people would be expected to operate under.
He believed in something called effective altruism, basically, which is that if you can help the most people, then that's the best thing to do. So if you can, so it's an argument for rich people. It's okay to earn lots of money so long as you donate that money. You can argue either way, but that was his philosophy.
And what's fascinating, to go back to Glenn's point about where he suddenly came from nowhere onto the world stage before it collapsed, is that just before FTX collapse, not that long before, he was being talked about as the JP Morgan of crypto, the savior of crypto, when there were other crypto exchanges going bust, and he was stepping in to rescue them. And he was the man who was going to put it all together and save everybody. And then obviously the whole thing blew up. But it does illustrate the dangers of holding crypto long term, because these things happen. It is an incredibly young asset that realistically has no actual value. It's only got value because people have decided that it has value, and it now has a track record, but it's a track record that stretches back a decade and a half, not a track record like gold that stretches back thousands of years. And it means that when these things happen, it can really blow up in your face. And if you have too much of your money in it, or you are not willing to just sit there and ride it out and go, well, I wasn't going to cash it in anyway, so it doesn't matter, it'll go back up again at some point, then you need to be very careful about what you're doing.
I would make one final point on the Sam Bankman-Fried is read Zeke Fo's book, Number Go Up. That is also very illuminating about this space. It talks about NFTs and what they call board monkeys or something, which I'm sure we'll get into in a second. But
Bored ape.
Yeah, whatever.
Yeah.
Same thing. A lot of people go, no, they're not the same thing. And I know they're not the same thing. But actually, both make a good point, because you're a trader, Glenn. And people think, hang on, this is often used interchangeably with investing. So it's sort of investing, but it's not really. And Simon said it is actually crypto good for a long-term investment, or is it much more suited to the dipping in and out, to the cycles that you do?
I think it's better for the dipping in and out. To me, it resembles futures markets, commodities markets like oil or gold more than it does the stock market. So, I still trade stocks all the time and futures, like in commodities.
What are futures?
Futures, without getting too technical, it's just things like commodities, treasury bonds, and then there's Forex as well, FX, trading currencies, traditional currencies against each other as well. So, I was already trained in all of this. So I was kind of ready when crypto came along from that point of view. The thing with stocks is that even though I consider myself a trader, sometimes I hold stocks for years at a time. And you would think of that as investing, right? I think there's a very fine line between the two. And the reason there's a particularly fine line for me is because I'm damn cynical about the idea of investing at all. When you buy a company, when you buy shares in a company, sure, the company might be on the way up and all the rest of it, but these things change, and so it's like you can't just buy, I don't know, any company and then just put the stock away and go, that'll be all right for 20 years. How do you know? Like, what if the CEO changes tomorrow? What if, the market goes bad? What if a new competitor enters the market and eats their lunch? It's like there are so many reasons why an investment should be questioned at any moment in time that, Simon, would you consider that kind of point of view investing or trading?
I think that over a long period of time, you would potentially consider it investing, but you are doing an element of timing the market. You are doing what people say you shouldn't do. Time the market, right?
Well, notice it's the people who want you to give your money to them to invest who always say you shouldn't time the market. Oh, no, you mustn't time the market. There's no point doing that. Instead, give me your money and I will invest it sensibly for you. So basically, it's a bit of a bugbear of mine, because you can time the market. You just have to learn how to do it, and some people do it really well.
I think it is an important point to make, because I think that, for example, to go back to fund managers, right? It is very difficult to find fund managers who are actually consistently beating the market. And in order to prove that they can consistently beat the market, you need to measure them over a much longer period of time than people traditionally measure them. To find a company that is a proven winner, a proven long-term winner, that you could justify the classic Warren Buffett line, my favorite holding period is forever.
Yes.
There are very few companies that are well run for that length of time and can continue to make consistent profits. And you will always have to accept that there will be periods when they don't do so well. If you zoom out and you pick stocks you pick your examples carefully, you
Hmm.
can find companies where that share price line just looks like it's gone up and up and up and up, but you're doing that with hindsight. You're picking
Yes.
winners with hindsight, and it's very difficult to do that ahead of the game.
Hmm.
So I guess what I find interesting from your point of view is then, what are you using to get in and out of those positions that means that you're avoiding the noise where there's just choppiness in the share price and you're not jumping in and out all the time? Because that's where people, when they try to trade, make the mistakes, isn't it?
Yes.
Simon, let me introduce you the crypto trader, where there's lots of graphs which you can follow. Sorry, Glenn.
Yes, it's true. The graphs explain the answer to what you just asked, really. But it's I'll draw one in the air instead. Basically, when you follow trends like I do, because after many years of relying on fundamentals and that kind of thing, I realized that fundamentals are a guide. They help you, but they don't tell you the whole story, because usually they have such a big lag apart from anything else. You often don't find out the truth about a company until the share price has already plummeted. So I'm looking out for the share price plummeting. So, in a very simple sense, when you follow a trend, you're following a graph that kind of, goes up. Say I buy it just after it's bottomed out, and up it goes for years and years, and it has its corrections along the way. And you see a kind of sloping staircase pattern as it goes up. And it's only when it starts, either has a massive drop near the top, and then I will carefully watch its price action as it sort of climbs back up after that big sudden drop, the kind of drop that silver and gold had last week, for example, like huge drops. But also the other main thing that tends to happen, and this is exactly what happened in the 2008 financial crash, and how I was able to kind of anticipate it and make money out of that crash, was because the market had been going up for years, doing its corrections along the way, which you don't worry about, as you say, because you don't want to get in and out all the time. That's a horrible life for a trader. I like it a bit longer term, more relaxed. But when it gets to the top, it tends to kind of then do a ziggy-zaggy thing at the top. It's like I could be explaining this to a child and they would understand, because it's so basic, and yet that's how these things work. It goes up, it ziggy-zags at the top, and then it goes down. So we have a childish slogan or saying, which has been going around for 100 or so years, which is follow the trend until the end when it bends.
Wow.
Which any 5-year-old can understand, right?
So basically, ziggy zaggy starts to fall. That's when you go, right?
Basically, when it gets to the
get
top,
technical here,
Yeah,
ziggy
ziggy-zaggy.
zaggy, fall. But how do you know when it's
right,
properly?
when it gets to the top, what's happening is, the reason it gets all kind of volatile at the top, and you get that sort of topping pattern quite often, like we did if you look at a chart of the stock market over 2007, 2008, you'll know exactly what I mean when you see it. And the reason that happens is because distribution is going on at that point in time. The people who bought early, the insiders, people who are friends with the people who run the company, those, the people we're all jealous of, who know about stuff that's going on, right? Those people are busy selling at the same time as the general public are buying. Because at the same time, when you've got something, whatever it is, whether it's a stock or a crypto, whatever, it gets to the top, and once it's at the top, you'll read about it in newspapers like yours, and everybody is excited about the same thing, whether it's Bitcoin or, I don't know, at Tesla, say, whatever it happens to be. At that point in time, that's when the ordinary folk are getting in, and they are providing the liquidity that allows the insiders to sell their shares or cryptos and get out. And it's that conflict between the ordinary people buying and the rich people selling that causes this kind of uppy, downy, choppy movement at the top. Because if everybody was buying, the price would just be going up and up and up. And if everybody was selling, the price would be going down. But you've got the two groups conflicting. And then eventually, the rich people have kind of finished their selling. The ordinary people are getting a bit sick of the fact that the price hasn't risen for ages, and they start losing interest. And then something like Sam Bankman-Fried or whatever it happens to be, something comes along and just triggers a collapse. And once it starts going, it's like a snowball rolling down the hill, getting bigger and bigger. That's I've That's gold I've given you there, guys. Because no, seriously, this is like the story of every major boom and bust throughout history.
And does the volatility of crypto help you in that sense?
Well, yeah, that's
Yeah,
why I
that's-
loved
that's
it
all it
so
is,
much
isn't
from the
it,
beginning,
though?
because the price would like go up 10 times. And if I bought early enough, then I'd get that 10 times. And even if I held on a bit too long and it started kind of falling, if you've made such huge profits and then you lose like 20% of it because it's gone over the top, because that's what I tend to do. I tend to like wait a bit too long, because I'd rather wait a bit too long and know, okay, you got it right. Okay, you've lost some of the profit at the top, but at least I know it really is heading downwards now. I'd rather do that than fall into the trap that you warned of earlier, which is that where you're buying and selling every little correction, going, oh no, it's going to collapse. If you get into that, you lose so much profit each time you're selling and then buying back in and selling and buying back in. You can ruin a really good long-term trade by getting in and out and in and out. The big money is, as Jesse Livermore, legendary trader, said more than 100 years ago, he said, the big money is in the sitting, is basically the sitting on your bum and not doing anything. That's where the big money is to be made.
Before we carry on, a quick word from our sponsor, PensionBee. If you're listening to this podcast, chances are you care a fair bit about investing and making the most of your money. But here's the thing, you don't have to be a pensioner to care about your pension. In fact, the earlier you pay attention, the more powerful it can be. Your pension is likely to be one of, if not the biggest investments you have, yet it's often the one people ignore the longest. That's where PensionBee comes in. They're a leading online pension provider focused on helping people build confidence and take real control of their retirement savings at any stage of life. Their app and website make it easy to combine old pension pots, manage contributions flexibly, and see exactly what's happening with your money all in one place. You can also access your pension from age 55, rising to 57 from 2028. If you want to take a more active role in your pension investing, download the PensionBee app or visit their website to get started. Remember, when investing, your capital is at risk. Let's be honest with us.
Yeah.
And I'll be honest with you, Glenn, again, with the book.
Okay.
I've discovered something about this show, Simon. I'm really lazy. I'm really lazy. And I don't know if it's laziness or, yes, with crypto, it's certainly an element of people telling me that I should do it. And that to me is like,
You don't seem very lazy. You've got all those Post-it notes.
oh no, I'm bookish. I
Okay.
like reading a good book,
All
Glenn,
right,
and it's
yeah.
a good book. But actually, to put this into action, can anyone do it? Because I'm looking at this thinking, and I'll tell a story here, Glenn.
It
because
literally says on the front cover, anyone can do it.
It does. But should anyone do it? Should anyone do it? Because I'll tell a story. Before each episode, I like to have a chat with our guest, Glenn, and I was going to have a
Yeah.
chat with you, and unfortunately it didn't work out. And one of the reasons it didn't work out is because you were too busy trading.
Yeah.
Which made me think, oof, this seems like quite a lot of effort. I mean, the book made me feel like this is quite a lot of effort. And you're talking about understanding trends. Well, you'll only understand them, obviously, if you read the book, but you'll only understand them over time. You've learned this by being in this game. You mentioned 2008 there. Like, you've been in the game a long time.
Yeah, you got to
Can
get
any
a
old
feel for
person
it. Sure.
like me, who's naturally quite lazy when it comes to investing, can anybody do this?
You got to put in some work.
How
okay?
much work are we
Not
talking?
a great deal, because you caught me on a bad day. I'm not usually actively trading, because, like I say, I'm not a day trader. I'm a longer term trader. My positions tend to be held for at the very least days. I don't buy and sell on the same day unless it goes wrong immediately, and then I'm out.
But you're
I
constantly
never wanna be
walking
in a
around
bad
with
trade.
the charts in front of you being like this. Are you a
No,
bit of a
I mean, there
bore?
was a time that when I
Yeah.
was a bit like that, but I learned over the years how to just chill out. And because frankly, it's counterproductive looking at the screen the whole time anyway. You want to take a longer term perspective. You also don't want to get too emotionally involved, because then you start making stupid mistakes. So you don't want to be staring at it all day anyway, for that reason too. There are loads of reasons. The reason why I was trading when you contacted me was because gold and silver were going crazy, and I'd been long gold and silver for ages, and now I was going short. I'm going short,
Right, yeah,
which
yeah.
for people who don't know about going short is when you sort of take a bet on something going down
Yeah.
rather than going up. And then I was long again, and it was great. But that doesn't happen very often at all. I mean, I'd been anticipating that gold and silver boom, as many people have, for years now, and it was building strength gradually. And it did exactly what crypto does. It did exactly what Bitcoin did in 2017 and 2021. It goes like that, and then it goes parabolic, and then it goes more than parabolic. It becomes an exponential curve, just like rising almost vertically. and then it plummets. Like silver went down, 35% in one day last week, I think. And, and that's what
25, but
Bitcoin did in 2017. And then this is how I got a publishing contract in the first place, was because in 2017, I had the Facebook page and I put a warning on Facebook saying, everybody's loving Bitcoin right now. Nobody had a bad word. Nobody had anything negative to say about Bitcoin in 2017. It was just like my mother-in-law phoning me up and going, and in her 80s, going, well, how do I buy this Bitcoin thing? Honestly, it was like that. Everyone was just like, this is the best thing ever. We don't know why, but it just is, because someone told us it was. And, it goes up to this ridiculous climax in 2017. And then suddenly plummeted one day. So I did a warning Facebook post going, warning, like, I don't know for sure that this is the end, but I've seen this kind of thing before and it looks pretty dodgy to me. When you get a sharp break like that, that is usually the first sign of impending volatility. There's going to be upping and downing, and then quite possibly eventually a collapse is what often happens at the end of those things. So I warned people, and indeed, lo, it came to pass.
Yep.
So lo, the publishers came calling. That's how it.
Nice.
That's how it.
When people
worked.
used to look at Facebook back in the day.
Oh, it was a halcyon days.
Glory years, absolutely right. How do you buy it? Is it easy?
It is now, yeah.
Yeah, in the olden days, it wasn't so easy, was it?
It wasn't so straightforward, but now there are any number of companies, even banks like Revolut and others.
What are the warnings? You have to be a bit careful about where you go, because there are a lot of sort of platforms and, so how can you watch out for the dodgy ones?
Yeah, the FCA, the financial regulator, now have a register of crypto companies that they have kind of approved of. Now, it must be stated these exchanges aren't fully regulated in the way that stock exchanges are, and your money isn't protected by the Financial Services Compensation Scheme either, like it is to a certain degree with stocks and many other investments. So really, what I always advise people to do, and obviously it's fully explained in the book how to go about this, you find a crypto exchange, or as I say, even a bank or some other company that has got the approval of the UK authorities, preferably. And if it has, then you're like, okay, so they're not complete cowboys, because Sam Bankman-Fried was a complete cowboy. We didn't mention this
But we all
earlier,
fell
but
for that.
for anybody who wasn't paying attention, he was a fraudster, and he went
he's
to jail.
in jail right now.
He's
yes,
in jail.
That was the end of that story.
Exactly, and it's exactly what you said before, Simon. Actually, with Sam Bankman-Fried, is he's up on the stage with these guys, and it. And also, you mentioned it as well, Georgie, about the effective altruism. He was seen as a major philanthropist, and that's why people, these top politicians got on stage with him, because it's like suddenly, even though he's only been born 5 minutes ago, you're considered like, a good person who does good things for the world. So you find a reputable exchange, you put your money in that exchange or on that exchange by transferring it from your bank, from your high street bank account. Also, a lot of bank accounts will be very difficult with you if you try and use some dodgy, unregulated exchange abroad, which is great, really, because they already know how many of their customers have lost money to scams, pretend exchanges. There are loads of fake crypto exchanges that look really good on the web, but are actually just scams, just people trying to steal your money. So you find a decent exchange that is regulated, to some extent, and you buy your crypto, and then crucially, you remove your crypto from the exchange into what's called a private crypto wallet, which is basically, well, it can be a number of different things, but in its simplest terms, it can be an app on your phone, right? Just another app, and it's a wallet app which holds your crypto money in it. And you transfer that from the exchange. And that way, you're only exposed to the danger of the exchange, even if it's a dodgy exchange. You're only exposed for the length of time it takes you to get the money out of your bank account, stick it on the exchange, buy some crypto, remove the crypto you've bought from the exchange to your own private wallet, at which point it's, as close to safe as can be. So that's what I always recommend to people, is not to keep your money on any exchange. And that even includes the most regulated ones like Coinbase, which is a really highly respected American company, which is listed on the New York Stock Exchange. It's a big deal. And so you can trust them to quite a large degree. But even then, they're just a company, right? They could go bust. And yeah, they say they've got Chinese walls, which means that your money should be separate from the company's money. So even if they go bust, your money is protected in their accounts. But we all know that when a company goes bust, and if fraud is uncovered, you can still get in trouble. So remove your money from the crypto exchange into your private wallet ASAP, and then you're only exposed for a matter of minutes to the company's own finances.
And why is that wallet potentially on an app on your phone that might be provided by a much smaller company that you've never heard of safer than holding it on an exchange that is provided by a large company that you have heard of and is regulated by a financial regulator?
Okay, well, there are certain wallets that are more respected than others. They're pieces of software, that's all. So, in my book, I mention a few of the best ones, but, a simple Google or asking AI can find other respectable wallets. All you want is a solid piece of software that's almost unhackable. Nothing's 100% unhackable if it's attached to the internet, and any app is attached to the internet. You can actually get crypto wallets that are physical devices, basically USB sticks, but with special software on them. You plug it into your computer, you download the crypto that you've bought from Coinbase or wherever it happens to be onto your little USB sticky thing, and then you remove it from the computer. And it's like, that's it. Your crypto, or at least the sort of passwordy things to your crypto, are safe on this device. And the only thing that can take your money now is if somebody robs you, or
you lose it,
or you lose it, or you set fire to it. Like, you may have heard this story. Have you heard the story about the Welsh guy who, for about how many years now? Like a decade.
Landfill.
He's been looking for
the
laptop in landfill.
He's offered the council something like 8 million, a sort of percentage of it. And even then they said no, which you can understand, because if they're going to put loads of resources to helping this poor sod basically find this computer that was chucked into landfill. But you hear horrible stories like that. And that is another reason why, for me, I'm just like, the fact that I could lose something and then that's it. It wouldn't be millions, because I probably wouldn't have traded at a good time or invested at a good time. But it's that I'm not the best with things like that. So
forget your little device.
But
I'm gonna let you cut corners. When it's just an app on your phone that you download, either on an iPhone or Android, it's fine. You get one of the major crypto wallets, and there might not be 100% security if it's attached to the internet, but it's put it this way: for my personal crypto, I'm fine with the apps, right?
Yeah.
If I had $1 billion, I'd probably be more careful, right? And I'd, be doing all kinds of clever things. In fact, the Winklevoss twins, those guys who helped to set up Facebook, and they became crypto billionaires, I think. They famously wrote their crypto passwords down on a piece of paper, chopped the paper up into many pieces, and then put each piece in a separate safe deposit box in different banks in different parts of the United States. That's like the utmost security. Even a nuclear missile could not get rid of their.
I'd just tattooed it to myself or something.
So essentially, what you're saving is the passwords to your crypto. That's the thing that you're saving. Yeah,
exactly. That's really what the wallet apps are for. Are just to, and also you can back up the passwords by writing them down somewhere. But again, then you've got the you've got to remember where you put the piece of paper. You just got to take a few basic precautions. If you can handle that much precaution, then you too can be a crypto billionaire.
But this goes back to my question around, is this the future of money? Because the future of money sounds a palaver. I was listening to this book I mentioned, Number Go Up, which was talking about these bored apes or bored monkeys. And he was like, the effort with which to buy them using crypto was phenomenal. It took ages, and he was panicking that he'd lose the numbers, because if you lose the numbers, then you've lost the money. And none of this to me seems seamless, democratizing. And actually, a lot of the stories we hear about crypto is it's used by the black market for nefarious reasons, for the dark web. That doesn't sound to me like this sort of decentralized savior of,
I know what
the
you're saying.
Do you know what?
It is getting easier, though, in practical terms, in logistical terms, a lot easier. Because you're quite right. In the early days, and even when these NFTs like Bored Apes were being sold, that was ridiculously complex procedure. You had to be
I
basically
feel
a
like
very
we should
techie,
explain what
very
Bored Apes
techie
are
person.
here
They're just
and
like
NFTs.
digital pictures of digital JPEGs of apes dressed in baseball caps and things. I mean, I was very scathing even at the time, much to the disappointment of many of my followers on social media who were like, "No, these are really cool." No, they're
How
not
are they
cool.
cool? They're like just these.
Not cool.
Yeah, exactly. JPEGs of apes, and people would spend hundreds of thousands of pounds on these things, and you're like, but what is it? Like, didn't Jack Dorsey do an NFT of his first ever tweet?
I mean, one of
What are you
them,
going to do with that?
the biggest
I've got some code.
sale was a guy called Beeple, who was a digital artist actually already, a starving digital artist. His wife was basically, paying for their life, paying for them to stay alive. He was earning pretty much no money as an artist, and he was fast approaching middle age and getting a bit worried and perhaps a bit desperate. And then somebody suggested to him, why don't you turn it into an NFT? This new crypto thing where people can buy and sell the JPEGs, on an open market. Maybe that'll do something for you. So he sets it up. He's got all this digital art he's already made. Sort of, he's kind of like a Banksy of digital art, doing cheeky, quirky, funny little JPEGs. They're good. I like them. But I don't know if I like them to the tune of $69 million, which is what he sold his first collection for.
Good on him, though. That's a good news story, though, isn't it?
It
You
is.
want to hear that. A
It's good for his
struggling
wife, I
artist.
think,
She must have been very, very happy. Look, if you don't want to do it that way that Glenn's explained, can you do crypto ETF?
Yes. Well, you can now. This is quite new.
Yeah, explain what that might be.
Bitcoin ETF.
Are you a
there's
fan,
Ethereum ETF. I'm a fan,
Yeah?
because it kind of brings it within the regulatory umbrella, which, crypto has sadly been lacking for many years. And, crypto has for a very long time been rightly seen as a bit dodgy. And I don't think Donald Trump helped matters too much with some of his crypto or his family's crypto ventures, should I say.
Didn't he do well, though?
Yes, he has done rather well, and they've done very well for themselves. And Donald Trump has done some great things for crypto. He has done some great things.
Yeah,
the best things.
Nobody's ever done anything as good. Right? What did he do?
He did the best things he did for crypto. Were there was basically a few acts going through Congress and the Senate, and there's actually a really important battle happening right now, a clash of the titans between the biggest crypto firms and the biggest banks, the sort of the JP Morgan type banks, because the banks are fighting a rearguard action because there are these things called stable coins. I need to explain these because these may be extremely important for the future of humanity. Stable coins are...
Oh, that's such a crypto bro thing to say.
Yeah.
Oh, Glenn.
No, seriously, they're becoming a big deal because suddenly the traditional finance industry has discovered them. It's realized that what you can do is you can take actual normal dollars. This is going to... don't worry if this goes over some heads because it's very kind of, plumbing of banking industry. But stable coins are, you say you take $1, right? And then you tokenize the dollar. You basically make a crypto version of that dollar. So it's kind of like an IOU.
Yeah.
These stable coins are types of crypto that you can then trade between different people. So you're just sending $1 or something representing $1 to your friend, but in a crypto-y way. You're sending it from your wallet to their wallet. Or when I say a friend, I mean, the banking industry make use of this kind of thing. So what they discovered is that the traditional plumbing of the finance industry as a whole, it's quite old-fashioned now. We've got SWIFT, the system of international messaging, which allows banks to send money to each other. All the old systems are a bit clunky and creaky. And so a lot of the big bankers have suddenly alighted upon this particular type of crypto, stable coins, and gone, hang on, instead of like this clunky old network with big fees sending money around from this bank to that bank, why don't we instead use crypto where we can tokenize dollars and then just send these virtual dollars around to each other, and it amounts to kind of the same thing in the end, as long as the stable coins are properly regulated so that you can then call on the stablecoin issuer and go, I want to exchange this token you've given me for a real dollar. And they go, yes, sir, we have it right here in this real
Just
bank.
like it says on the front of your note.
Yes,
I promise to
promise
obey
the
the bearer.
exactly.
Daft question, though, but couldn't you just have a dollar rather than
Well, this
crypto?
is what I'm saying is if only you could just have a dollar, because it has to work through this old-fashioned plumbing system.
Yeah.
So instead of rebuilding the plumbing system in a better way, they've just gone, oh, well, instead there's this new thing, stablecoins, and they kind of do the same
Something
thing.
like
as the plumbing.
Tether. Is that a stable?
Yes, that was, and that was a really good example of one of the first it was the first big stable coin, and it seemed, I think it's fair to say, dodgy at times.
Read that book that I've mentioned a couple of times
Yes,
on this show, and I'll say no
yes.
more. But yes, it didn't fill me again with the sort of warm and fuzzy feelings.
Exactly. So what you've got now is this is why I'm liking what Donald Trump has done, because one of his acts is about regulating stable coins and making them trustworthy, because some people did worry that Tether, based in, I think, was it the Bahamas or Bermuda, one of those lovely places, had not entirely transparent accounts, shall we say. So that was very, very worrying, considering it was handling many $1 billion of these virtual dollars. So instead, we've now got this situation where through Donald Trump's legislation, we should see trustworthy stablecoin operators emerging. And I said that there was a big battle between the traditional banks and the crypto companies. That's because the traditional banks want to prevent stablecoins from paying interest, because they are terrified, and they've admitted this quite openly, that if stablecoins take off in a major way because they're paying interest, then people are like, well, I might as well hold these dollars and I get some interest as well. Who's going to put their money in a bank then?
Well, quite.
And to go back to Georgie's question about the ETFs or ETNs as they are in the UK,
annoyingly.
Does this provide some form of investment case for crypto, in the sense that if people don't want to trade it, if they do just want to buy some Bitcoin and hold a bit of Bitcoin, there is an element where, because it is becoming normalized within the financial system,
and you can buy and sell it on the stock market, as you say.
You can buy and sell
ETFs,
it on the stock market, and you are now opening it up to institutional investors who could not previously buy Bitcoin, because any of the three of us can go onto an exchange, buy some Bitcoin, stick it in a wallet if we want to. But if you are a fund manager or a large pension fund or a big institutional investor, the rules say you're not allowed to do that. Some of the fund managers can do, but they're operating very niche fund managers at the margins. Most of the global investment industry cannot previously, until now, hold it because it's done in an unregulated way. Does that create more of an investment case in your view, or is that a false hope that people have?
It is a genuinely good thing for crypto, but confusingly for everyone, it's kind of coincided with the market going sideways for many months, as it has done, and then now starting to fall, to the lowest point it's been since sometime last year. And so people are like, well, hold on. I thought this is the crypto bros were all like, when the big institutions get in, that's when the real money comes. Oh, the price is going to go through the ceiling. It's funny how people always think they know what's going to happen in the future. But the truth is, maybe you're going to get a load of institutional money, which is exactly what happened. Something like approximately half of Bitcoin is now owned by big institutions, whereas a few years ago, almost none of it was. You'd think that would be wonderful for the price. But no, it hasn't been. Because whilst those people have been buying, other people have been selling. A lot of the long-term holders, the people who've been in it since the really early days, have been selling, feeling like, this is the top of this cycle. That's how they feel. Maybe they're right, maybe they're wrong. But, it got to that kind of 4-year point. As I said, traditionally, there'd been 4-year cycles. So a lot of the old hands who'd been in for 10 years or so had started selling. And the price has been going down. And so even though you have all that huge institutional investment, price going down, is that a big problem in the long term? I don't think so. I think we're on firmer ground, having the institutions wanting to hold Bitcoin. They won't always hold it. And if it starts crashing badly, I'm sure their bosses will be bursting into their office going, you said that Bitcoin was going to be the future. Sell it. I don't want it in your portfolio anymore. And, a lot of fund managers will start offloading it. But, then it'll settle down again over a space of a couple of years. People forget about crypto. And then suddenly there's a new narrative comes in and, maybe stable coins will become absolutely huge and, effectively sort of vie with the traditional dollar for supremacy in the global financial system. Maybe that'll be the narrative. Maybe it'll be the pictures of apes with
Absolutely.
caps on. But whatever it is, people will get excited again. They'll start buying again. The fund managers will start getting told by their friends and by their bosses, "Oh, why didn't you have any Bitcoin in your portfolio?" And they'll be like, "Oh, I better buy some," just like they did recently, if you see what I mean. And then before you know it, it takes off again. As you can tell, I'm highly skeptical that we've seen the last of Bitcoin and crypto at this point. Yeah, it's going through a bit of a quiet patch, but the regulation is getting there. The stage is being set for it to become an integrated part of the world financial system, and that can only be good in the long term.
Which is interesting. And it goes back to something I keep talking about, which is this democratization of money, this, what some people originally said was so great about Bitcoin and why it was the future was that you could take it away from the big finance institutions, etc. And yet what they're
Yes.
saying is kind of the more mainstream it is, the more money, the more regulated, etc., the better. Well, that goes against what the original sort of premise of it was. So can crypto really be mainstream and revolutionary?
This is a really good point, and I think you've hit on the real conflict that has caused a lot of the old zealots, the religious people, to kind of lose hope because they wanted institutional money to come in, but as you say, the last thing they wanted was for the banking system to kind of take control.
And not just the
And
banking
it's
system.
not taking control.
We've had
exactly of
countries
Bitcoin.
say, like, didn't we, when we were going to have a Britcoin, wasn't China going to have its own? All these sorts of
China
things.
has got its
Well,
own,
there we
but
go.
but it hasn't really done as much with it as it did. A big experiment in one city with this kind of virtual renminbi, but then they sort of forgot about it. They got bored of the
Well, it's a
idea.
bit like El
Similar to
Salvador.
Bitcoin,
They tried it, and it just was too difficult for people to convert things into Bitcoin, and it was just a nightmare.
It wasn't organized properly, and actually, I was going to tell you a quick anecdote a few minutes ago when you were saying, it's still a bit clunky, and how do I do this, and it's difficult to do. Like I said, it is getting easier, but I remember this is the fascinating thing, is that back in 2018, I started sitting on stages talking about Bitcoin at conferences, and I'd be sitting there with people who are absolutely massively ensconced in the industry, the CEOs of wallets and exchanges and all of that, and they were like, "This is going to take over the world. This is how it's going to happen. We're doing this, and the infrastructure is blah blah blah." And then I remember they asked for my opinion. I was one of 4 panelists, and I was the only one wearing sort of a smart jacket. Everybody's in hoodies and all the rest of it. They saw themselves as cyberpunks in those days, and I was the kind of sensible looking guy. And but at the same time, I was the down to earth one, because I said, "Yeah, this is all very well, all the stuff you're saying, but what bothers me is that, like, my mother," because that was the time when my mother-in-law was asking about buying Bitcoin. I said, "How's she going to, like, buy her coffee with it or whatever? Like, is it just something she's just supposed to buy and keep as an investment for no apparent reason?" It's like, if this is going to become a thing, there has to be some kind of reason behind it, something it does. And at that point in time, people were saying, "Oh, you'll be using it to pay for your coffee in the future." So I said,
remember.
right. I said to the guys on the stage, "So when is that going to happen? When is my mother-in-law literally going to be able to just, like, get her phone, click on one app, and click buy coffee? When's that going to happen?"
When, Glenn?
And here we are in 2026.
Is it going to happen, though? Do you think
Still
it will
not
ever
happening.
happen?
Still not happening. Well, I think to some extent it will happen, but that's not the main purpose of Bitcoin anymore. That dream has at least died, at least temporarily. Maybe it'll come back in some form one day. But I think that was one of the major problems for the sort of the dream of Bitcoin and crypto, and why the price isn't doing what we would like to do and just continuing to go through the roof. It's because that particular dream has died, and it hasn't really been replaced by anything that captures the public imagination. I've just tried to explain stablecoins to you, but it's not a very exciting sounding dream, is it? It doesn't tell a great story, but it's damn important underneath, behind the scenes. So
How many cryptocurrencies do you reckon there are?
Thousands.
Thousands, right?
Thousands.
What is setting your world on fire right now? You said you're out Bitcoin currently, but
Yeah.
you still think the future is bright. You've mentioned stablecoins.
Mm.
Like, what else is out there at the moment that's sort of you're thinking, yeah, like how many coins are you trading at one time? Are you completely out of all crypto at the moment? Do you
Pretty
only do
much, yeah,
Bitcoin?
because it's like not going up. I don't want to buy things that
Fair,
aren't going
fair.
up.
But do they all follow
Am
the
I
same?
crazy?
Is it like if Bitcoin goes up, then
Pretty much. It's a bit like, the major tech stocks kind of rule the stock market, don't they? And where the Apples and the Amazons and so on, when they go up, most other things go up. And when they go down, most other things go down. Bitcoin is even more of a sort of bellwether than that. It rules the crypto industry, still does, still the big daddy, still worth far more than any other crypto. So yeah, if Bitcoin isn't going up, the whole market is probably in some trouble. And even if you've got a crypto that has got really good prospects and it's independently a really good company, it will struggle to rise in price if Bitcoin is not going up. So yeah, I'm kind of steering clear of all cryptos at the moment for trading purposes. But there are loads that are kind of bubbling under and will become seriously interesting. Okay,
give me
the
some
privacy coins, right? There's one called Monero. There's another one called Zcash. Coins where your activity is almost completely untraceable. It's a niche use. I'm not saying everybody's going to be using them, but for certain purposes, and dare I say it, criminals will make use of it.
Who would want to use those, I wonder?
But not just criminals, also freedom fighters.
Right, yes, of course.
And, anybody who's scared of their government finding out what they're up to, which is a hell of a lot of people in the world, right, can use privacy coins basically it's like Bitcoin, but with Bitcoin, Bitcoin is not anonymous, it's what we call pseudonymous, which means that all the transactions can be clearly seen on the blockchain. So you can see what everybody has been buying and selling and all the rest of it. But it's pseudonymous in the sense that you only get, the wallet number. So you don't know who owns that wallet.
It's not like Glenn Goodman has bought.
But the police are really, really good these days, as they should be, at using little forensic clues to connect a certain wallet that may contain the proceeds of crime and connect it to a real-life human being. And in fact, I've acted as an expert witness in a Crown Court case where they were prosecuting a guy for drug smuggling. And my job as the expert witness was to analyze his crypto buying and selling records.
Wow.
And try and work out, could these have been used for innocent purposes or are they used for crime? And then, it was up to the jury to listen to what I said and work out, because it could have been either. See? They found him guilty, by the way.
All right.
He was banged up.
All right, fair enough.
In a much less nefarious element, but thing that people still get caught out with.
Yeah.
We should talk about tax, shouldn't we? Because there are a lot of people who think that the profits that they make on crypto are not taxed, and that is not true, is it?
Not true at all, and never has been, actually. I've been paying tax on crypto. I'm trying to think, when was the earliest year I paid? Well, as soon as I had made profits that were above the capital gains tax threshold, because crypto has all along, the problem was HMRC and many other tax authorities around the world never really made it that clear what the crypto rules were for many years. So all crypto people kept going, oh, there aren't any rules. But no, they had just basically said offhand, I think HMRC said many years ago, oh, it's just like shares, Just like you declare your share buys and sells and you pay capital gains tax on those unless they're held within an ISA, obviously. And it was the same for cryptos. So, they're dealt with for tax treatment in much the same way. The problem comes when you're dealing with more esoteric forms of crypto. I mean, you mentioned Bored Apes and so on, but there are even weirder kind of technical crypto-y things that you can do. And I did a few of those as experiments. And then, my Lord, trying to discuss with HMRC the tax treatment of these weird derivatives that had only been invented last week or whatever. It was difficult. But the key was to keep an open conversation with HMRC back in those confusing years. I just wanted them to know that I meant well and I would do anything they tell me. Just whatever you say, I'll do it. Whereas now, They've clarified the rules, and the tax treatment is very, very similar to stocks and shares. So, capital gains tax on your gains above the tax allowance, but also crypto can be counted as income in certain circumstances. Sometimes you get what are known as airdrops, which are kind of like dividends on shares. You get a bit of income, and then you have to report that as income on your tax return.
Well, I can't finish the show on tax,
No,
can
please,
I? No,
please
goodness
no.
me. So, I mean, I do want to ask you, Bitcoin aside, because I sort of think, it's boring, isn't it? Of the other coins that you've traded,
Yeah.
what have been your winner, French kiss winner, or chef's kiss winner, and what's been your real stinker?
The funny thing is, well, the one that sticks out to me is a really small, unimportant coin, but it's so illustrative of my trading technique. It was called well, it still is called Santiment, right? And it became big in 2017 because it was one of those websites. Basically, the coin itself was a company, and it issues this coin, but its main business is we've got this website where we have lots of graphs analyzing crypto data and cryptographs, and not just the prices of different cryptos, but various technical analysis, and kind of like those shares websites where you can analyze shares in lots of different ways, right? But for crypto. And everybody was like, well, this is great, isn't it? Everybody wants this. And I was like, yeah, this is great. So I'm going to buy this Sentiment. So I buy it. And then during 2017, its price went up. I can't remember, the hundreds and hundreds, maybe even thousands of percentage points. And when it got to the top and I saw the trend was bending, I sold the thing, right? And this is why it's so illustrative. Some people might have held on to that going, but it's a solid business. Yeah, it's going through a bit of a downturn, the whole crypto business is, but this company is, it's going to go from strength to strength. But there were competitors, there always are, just companies doing the exact same thing, right? And B, as I say, all of crypto was crashing, and I just get out in those circumstances because you never know what's going to happen during a bear market. And in fact, the price of Sentiment collapsed to a tiny, tiny percentage of what it had been. I would have lost basically all my money, apart from a tiny, tiny bit. And instead, I came out with massive profits. And here's the weird thing. Sentiment is still the website, is still doing that good data stuff that it was doing before, but nobody cares. Like, everyone went to the other websites that do the exact same thing. So that's why the price has never recovered. But I just think it's really illustrative, not just for crypto, but for trading in general, whether it's stocks and shares or anything else, is that however strong a narrative seems to be, and in that case, the strong narrative was this is a great website doing exactly what crypto fans need in their life. Yeah, that's a great narrative, but a narrative is only ever part of the story. You can't rely on it as your sole reason for staying in an investment. You have to know that the price is going to continue to go up as well. Otherwise, what are you doing in it? Even Warren Buffett goes by that maxim. Warren Buffett didn't take chances. He didn't, for example, just, when he bought shares in a company for about the last several decades of his investing life, he would buy the entire company.
Yeah.
And then he would control the management of that company. He wasn't taking chances going, I reckon this one will do well.
What fundamentals then are you looking at? The difference between Warren Buffett or anyone looking at, company shares is, well, you've got history, you've got, measurements, there's things that you can actually look at. You mentioned there about how do you explain to HMRC something that was only invented like 5 minutes ago. What are you looking at?
Yeah, it's harder in that respect, as you say. I mean, if you buy shares in Coca-Cola, well, actually, as I did last week, I bought some shares in Coca-Cola because they've taken off again. But, that was one of Warren Buffett's all-time great investments was Coca-Cola. And the thing is that, you've got profits, you've got dividends, you've got revenues, you've got all this lovely fundamental data to look at. With something like Sentiment, when I was trying to decide, should I bail out now I've made all these thousands of percentage points in profit, or should I hang on because maybe it will go up another 10,000%? I couldn't just rely on profits, revenues, dividends. There was none of this stuff. It didn't even seem to exist. So, or at least not, it wasn't visible. I didn't know how this company was doing. All you could do was look at the website and go, this looks like a nice website and lots of people are talking about it and lots of people are using it, so I'm told, right? So it's particularly important in the world of crypto to take every piece of fundamental information you hear, every narrative with a big pinch of salt, and to trade in a technical fashion. So I guess I would finish off my bit of this podcast by saying quite simply, when you're in crypto, fundamentals matter less or should matter less, and technical analysis, looking at charts, should matter more in your judgment of what to buy and sell than if you were trading stocks. If you're trading stocks and shares, you have got some pretty solid fundamentals to guide you. I still don't believe that should be your only guide for all the reasons that we've previously discussed. But at least with stocks and shares, you've got like a floor to the shares. At least, if they're going to plummet, but the company is still making profits, then they're only going to plummet so far because people are going to start buying them because the profits give them a fundamental value. Most cryptos and nearly all cryptos just don't have that. So that's why I trade with the trend and get out when it bends.
Is there anything that would make you walk away from crypto?
What you mean? Never trade it again?
Never trade it. Just walk away. What would have to happen?
Wow, no one's ever asked me that before. That's an interesting.
I feel
question.
honoured. I don't know if it's a good question, but I thought I'd ask you anyway.
Okay, this would certainly make me consider leaving crypto if Bitcoin got successfully hacked. Right, Bitcoin, the actual thing itself, not the exchanges like FTX or any of the other dodgy infrastructure that's been built up around Bitcoin. If the Bitcoin blockchain itself was successfully hacked and huge amounts of money was stolen from it, I think that could possibly murder the entire crypto dream. And frankly, there is something to worry about on the horizon on that score. Quantum computing is coming along, right? Quantum computing, which Google is already doing quite well with by the looks of it, if they manage to, suddenly somebody just suddenly comes out and goes, that's it, we've cracked it, we now have, the cryptography of Bitcoin is now crackable using quantum computers. We've just done it last night.
Yeah. You'd be out.
It would be terrifying because there's a big argument going on in the little Bitcoin development IT community at the moment where some of them are going, we have to get stronger cryptography because quantum computers are coming along any minute now to ruin, to basically just hack the blockchain, because all it is strings of letters and numbers, and if you've got a strong enough computer, you can hack it. So, but it is not possible yet, but it will probably be possible soon. So the argument is some of the Bitcoin devs are like, oh, this is urgent. And the others are like, meh, it'll be all right. It'll be all right. We got ages. We got till probably like 2040. I don't know why I'm doing that accent.
All right, you got till 2040. We're all right then, aren't we? Right.
Yeah.
Final one for you, Glenn. The £1,000 move. If you had an unexpected £1,000 given to you, what would you do with it?
Wow. I think I would, what would I do? £1,000. I would buy the entire podcast box set history of the Simon and Georgie experience in all the various places where you broadcast, and
the NFT version.
The reason it costs £1,000, I think, is because it is a limited edition. It would come with full-size cardboard cutouts of you two.
I'd like to think it'd be more than £1,000.
And I'd be able to sit in a chair like this and just feel like I'm being interviewed by the two of you every day, whenever I feel like it.
I do think it would be more than £1,000. I'm just saying. The NFT and if you want to throw in the cardboard cutouts, I'm just saying.
Cardboard is not cheap these days.
Well, you know what I mean. Simon says,
I think the important thing to take away from the conversation with Glenn is that it's the extreme volatility of Bitcoin and crypto in general. But Bitcoin is the one that everybody focuses on. And it is that element that, yes, it's absolutely fine to have some Bitcoin. It's absolutely fine to have a small amount of Bitcoin and to hold on to that Bitcoin or to trade Bitcoin, however you want to do it. But you have to accept that it could go down by 50 or 60% in a year and up by 50 or 60% in a year. And you have no idea why that's going to happen or which year it's going to happen in. And if you can handle that, absolutely fine. But if you can't, and it is a larger part of your money than is safe for that to happen without it making a big difference to your finances, then steer well clear of it.
Good advice there, Simon.
Yeah, I agree with that.
Glenn, thank you so much. Simon, thank you. And thank you for joining us. If you want to get in touch with us, you can find us on social or email us. Remember to hit subscribe so you don't miss an episode. And make sure to tell your friends who don't know their NFTs from their BTCs about us as well. If you enjoy Investing Unlocked, especially our retirement episode, then I think you'll enjoy this from our sponsor Pension B, the Pension Confident podcast, hosted by Philippa Lamb alongside a panel of financial experts. It's aimed at those who want to understand pensions and personal finance in a bit more depth, but without the jargon. They cover topics like ISAs, mortgages, the bank of mum and dad, as well as how to become a pension millionaire and the cost of divorce. There are new episodes every month, plus bonus content in between. You can listen on all major podcast platforms, in the Pension Bee app, or watch on YouTube. Just remember, anything discussed isn't financial advice, and when investing, your capital is at risk. Search the Pension Confident podcast wherever you listen. Before you go, just a quick reminder that everything you've heard on this podcast is for information and education only. It's not personal financial advice, investing involves risk, and if you're unsure, it's best to speak to a regulated financial advisor.